With the U.S. markets currently closed, Trilogy Metals Inc. finished its last trading session on October 14, 2025, at a price of $10.60 per share. This represents an absolutely colossal single-day surge of $4.04, a gain of 61.59%. A move of this magnitude in one day is extraordinary and naturally grabs the attention of the entire market. When a stock puts up numbers like that, the immediate assumption is that a transformative event has occurred, a buyout, a landmark discovery, or some other fundamental shift that permanently alters the company's valuation. But the reality with a company like Trilogy Metals is often far more complex and tied to a much longer and more uncertain timeline than a single day's trading activity would suggest. This isn't like watching Nvidia stock react to a blowout earnings report based on tangible current sales. This is a move based almost entirely on a future promise, and that is a very different kind of situation for anyone considering an investment. The general belief, the expectation driving a 61% price spike, is that the company has struck gold, or in this case, a massive, economically viable deposit of copper, cobalt, and other essential metals. The market is pricing in a future where Trilogy successfully develops its Alaskan assets into a profitable mining operation, supplying the raw materials critical for electric vehicles and green infrastructure. Investors see that number and think the riskiest phases are over. They believe the company has now proven its resource and the path to production is clear. This narrative suggests that getting in now, even after such a huge jump, is still early. This is the story that gets traders excited on platforms like the Robinhood app or SoFi Invest, where quick access and fractional shares make it easy to participate in these dramatic moves. The expectation is that the geological uncertainty, the biggest hurdle for any exploration company, has been largely eliminated. However, it is critical to challenge this assumption. The reality for a junior mining company is that a positive drilling result or an encouraging preliminary economic assessment is not the finish line. It is merely the start of a grueling marathon. This marathon is filled with obstacles, including rigorous and often politically charged permitting processes, the need to secure hundreds of millions, if not billions, in financing, and the logistical nightmare of building and operating a mine in a remote location like Alaska. The 61% gain does not reflect a company that is currently generating revenue. It reflects a surge in optimism about a project that is still many years and many hurdles away from producing a single ounce of metal. While many are comparing this to the explosive growth of certain tech names like Tesla stock in its earlier days, the risks here are arguably higher. Technology can scale quickly. Geology and government permits cannot. An investment here is not a simple transaction on a fidelity trading platform. It is a wager on a decade-long industrial project succeeding against formidable odds. Experienced investors using more sophisticated platforms from interactive brokers understand that this recent price action is speculation on a future event, not a re-rating based on current financial performance. Let's break down the recent activity. The volume on the day of the spike was astronomical compared to its daily average, indicating a massive influx of interest. Trading volume that is tens or even hundreds of times the norm suggests that the news catalyst, likely a press release detailing positive results from their Ambler mining projects, was widely disseminated. This wasn't a slow creep up, it was an explosive reaction. The key question for anyone performing serious analysis is who was doing the buying. Was it large institutional funds that have the capital and patience for a long-term project? Or was it driven by a frenzy of retail traders? While institutional participation lends credibility, a retail-driven surge can be ephemeral, prone to a sharp reversal once the initial excitement fades. This is why looking at Level 2 data and block trades through a service like Interactive Brokers can provide clues. For the average person managing their own portfolio, perhaps through a self-investing account with Schwab Intelligent Portfolios or a similar service, a stock exhibiting this kind of volatility is the definition of a high-risk asset. It's the kind of holding you allocate a very small portion of your capital to, as it stands in stark contrast to the stability of broad market Fidelity ETFs or Fidelity mutual funds. So what does Trilogy Metals actually do? The company is focused on mineral exploration and development, specifically at its Upper Kobuk mineral projects in the Ambler mining district of northwestern Alaska. Its primary assets are the Arctic and Bornite projects. These aren't just any deposits. They are rich in copper, zinc, lead, gold, and silver, with Bornite also containing significant cobalt resources. These are the very metals that form the backbone of the modern economy's shift towards electrification. Copper is essential for wiring, electric motors, and charging infrastructure. Cobalt is a key component in batteries for electric vehicles. By focusing on these metals in a politically stable jurisdiction like the United States, Trilogy positions itself as a potentially crucial future node in the domestic supply chain for these strategic resources. The company operates through a joint venture, Ambler Metals LLC, which is co-owned with South32, a large diversified global mining company. This partnership is a significant point of validation. South32 brings financial muscle and operational expertise, which is a major de-risking factor compared to a junior miner trying to go it alone. Still, the business model is straightforward. Spend capital to explore and define a mineral resource, prove its economic viability, get it permitted, build a mine, and then sell the extracted metals. They are currently in the pre-revenue, pre-production phase, meaning their survival and success depends entirely on their ability to raise capital and successfully advance the project. Looking ahead, the future of Trilogy Metals is a tale of two very different potential outcomes. The bullish scenario is that this recent positive news is a major step towards confirming a world-class mining asset. In this future, the company successfully completes its feasibility studies, navigates the multi-year state and federal permitting process without major setbacks, and secures the necessary project financing with the help of its partner South32. As the project moves closer to construction and then production, the company's stock would be systematically de-risked, leading to a continued, albeit more gradual, appreciation in value. If global demand for copper and cobalt remains strong, which many analysts predict, Trilogy could become a highly profitable producer in the next decade. This is the outcome that everyone who bought the stock at $10.60 is betting on. It's the kind of long-term growth story that might appeal to someone building a diversified individual brokerage account with a provider like Fidelity, balancing it against more conservative investments. The bearish scenario, however, is just as plausible and represents the reality check to the market's current euphoria. The primary risk is permitting. Building a new mine in the United States is an incredibly difficult undertaking, subject to intense environmental scrutiny and potential legal challenges from various groups. A delay of several years or an outright rejection of a key permit could be devastating. Second is financing risk. Mining projects are enormously capital-intensive. Even with a partner, securing the final project financing depends on market conditions, interest rates, and commodity prices at that future time. If copper prices were to fall significantly, the project's economics could become unattractive, making it difficult to fund. Finally, there is geological and operational risk. Further, more detailed drilling could reveal that the deposit is more complex or costly to mine than current models suggest. The remote location in Alaska presents significant logistical challenges, from building infrastructure to dealing with extreme weather. Comment below what you think is the single biggest risk facing Trilogy Metals right now: permitting, financing, or commodity prices. Any one of these factors could turn this exciting prospect into a decade-long stagnation, a cautionary tale for those who chased the 61% spike without appreciating the underlying complexities of the mining sector. In summary, the dramatic rise in Trilogy Metals' stock price is a clear signal of the market's high expectations for its Alaskan copper and cobalt projects. The narrative is powerful, a domestic source of critical metals essential for the green transition. The 61% gain reflects the belief that the company has cleared a major hurdle and is on a clear path to production. However, the reality is that the company has only just begun a long, arduous, and uncertain process. The path from a preliminary assessment to a functioning mine is fraught with regulatory, financing, and operational risks that the current stock price may not fully account for. The tension between the market's excitement today and the immense challenges of tomorrow is what will define this stock for years to come. This is a story of profound potential clashing with profound risk, and investors would do well to understand both sides of that equation before participating.